During the financial crisis, there were investors and owners of systemic large banks that were bailed out, and we're certainly not looking, and the reforms that have been put in place means that we're not going to do that again.
Those two geriatric buffoons have so much power over the economy. It's terrifying. SVB was the nation's 16th largest bank. It's where lots of tech companies and startups kept their cash. Some are on this list you see right there. It doesn't have a lot of small customers with teeny tiny checking accounts, but it does handle a lot of payroll. So the people getting burned are folks like Etsy merchants. And now the problem is spreading. Signature Bank also halting business in a few other banks, including First Republic, said to be struggling. So how can we protect our hard-earned money and make sure this doesn't get to you and me? Let's break it all down with Fox Business senior correspondent Charlie Gasparino.
If I got tears in my eyes because I couldn't help laughing at, I was between Biden and Aunt B.
Yeah. They're in charge of our economy. We're screwed. I don't care what they say.
These are the adults, and they're really adults. If
Yeah.
you saw,
Yeah.
in age, not in anything else. Although Dagan kind of reminded me of that scene in Animal House. All is fine.
Yeah, all is well. Remain calm.
That was Kevin Bacon. All of a sudden he gets run over.
Yep, trampled.
Listen, here's the thing. You can't have 3 years of insane fiscal and monetary policy. Fiscal policy is what comes out of government in terms of spending. Monetary policy is what comes out of the Fed in terms of printing money and interest rates. Both were insane. Both were like on steroids. Interest rates at zero, printing all this money, buying bonds. That's how you print money. You buy bonds in the open market. Prices go up, yields go down. Banks are infused with cash, but they did this to some enormous amount, and then the spending was to some enormous amount. You can't have that much stuff, dollars sloshing around the system, by the way, at a time when you didn't really need it, and not have these sort of what's known as externalities and weird.
And no productivity.
And no productivity. So what happens? It goes into financial products in terms of risk-taking that's off the charts because you're flush with cash, and you always have this. So in my view, this is just the beginning.
Yeah, but those you listed two really important things there.
Right.
And that was the unholy alliance of the fiscal policy of
Insane.
this administration
Right.
spending money
When you
like we
didn't
have
need it.
never seen before.
Remember, we came out of 2021, we were coming out of the pandemic.
Yes.
Businesses were open up. I got my shot. I was out. I went to work. Yes,
And
it was.
a few people like
yeah.
Larry Summers running around going, we're spending way too much money. This is going to be
Saying that.
problematic,
Yeah.
and it's going to bite us
Right.
on the backside. But then you have the Fed saying inflation is transitory, don't worry
And
about
I'm just
it.
going to keep printing
Janet
money.
Yellen and
It's Jerome Powell.
Jerome Powell, Jay.
She used to be at the Fed.
They were saying the same thing, like,
Right.
oh, it's transitory. Inflation is
very transitory.
And then they were forced to raise rates so quickly
so-
that a bank like this, why was a bank like this so vulnerable to rising interest
So now
rates?
there's some idiosyncrasies with this bank. Just so you know, it's the Silicon Valley Bank, means it was in Silicon Valley, so it was dealing with Silicon Valley customers mainly. But it also, risk-taking is endemic. You're getting crypto that's corrected. I know Bitcoin was up a little bit. It'll correct more. You have AMC, those crazy meme
stocks.
They're corrected. They're all getting smoked. They're probably going to get smoked more. You're going to get other things that are getting smoked. Housing values are coming down. Now, that's because we're raising rates. Now, you could say, why are we raising rates? Maybe we just keep them high. Well, if you want 7% inflation for the rest of your life, which will destroy society, which means it's almost like working during a recession, well, then you get to take 7%. So we're going to have raising rates. They may back off temporarily, but they probably have to come back. So we're going to have more of this. Now, why was this a little different? Just got off the phone with a former SVB executive, who was a pal of mine, source of mine. They were particularly in some crazy businesses. They did tons. Their lending book was not like the typical bank where you lend to a construction company, you do a lot of home mortgages and stuff like that. They barely did any of that. What they did was they lent to VC firms. They leveraged up. They lent to other highly leveraged firms. And these lending facilities started to, there was a crack in them where the people were pulling money out and they didn't have the money to pay that.
Yeah, because they lost their arse on
now,
bonds.
On top of that, to make good for that, they had to sell their assets, their capital. the capital that they had to sell was with durations. Those loans are short terms. Their durations are longer. That means you have to sell them at the market price, which was down because of higher interest rates. You have a mismatch right there. You have a lack of, essentially, you have insolvency.
Okay, so if the Fed keeps raising rates,
right.
We only have 30 seconds. What's next? What is the next sector of the economy?
You want macroeconomic theory in 30 seconds.
Absolutely right. And Charlie Gasparino, just the man to do it.
If they keep raising rates, which they will, if we keep having inflation, this is the beginning. And I'm not saying it's 2008, but we're going to have more of this because this is what happens. This is what happens when you normalize. When the crack addict comes off of crack, the heroin addict comes off of heroin, which was the markets, they get the jitters. And that's what we're seeing.
Well, and you also have mismanagement because they acted like that money stream was going to last forever.
Now, I know we don't have any time, but I'm just going to leave you with this. Why was this bank, which wasn't handling Aunt B's, checking account, wasn't giving money really to construction companies, was doing these leverage loans to VCs. Why did they have FDIC insurance in the first place?
Only 3% of the accounts there were FDIC accounts.
What do you mean?
They were over $250,000.
Well, they would be because they're major players.
Yeah.
But why do they, if they're going to take that type of risk on their asset base, on their loan base, why isn't the Fed? And by the way, they're not small.
No, but the federal government shouldn't come in
they should have known.
They should every disaster.
They should,
and they've got enough
that's
regulation.
A whole issue. Why were they given bank status? A hedge fund is given bank status.
Interesting. See, Charlie's the only person who said this was a hedge fund operating like a bank. That is honest.
It's a hedge
Charlie
fund
Gasparino.
given bank status.
Thank you. So
I
good
want
to talk
that
to you.
job.
Let's do it.
Could you imagine our hedge fund?
It would be very.
We'll be laughing
fun
people's
and
money away.
Yeah. Bye.